My name is Matt Liu. I'm a partner and chief strategy officer at SynFutures. Today, I'm very honored to share this keynote speech at the Pyth developer conference today. And the topic is to build a data-driven derivative protocols for users. For those who don't know about us, so we are building a perp DEX, and we have been around for almost 3 years, evolving from a AMM-based futures when maturity through a couple of different versions to today, the latest one, version 3, which is a combination of AMM and order book, both on chain in one model, supporting perp. All right, so let me dive into this topic. It will have two parts. The first is we're going to take a look at the evolution from more function-based product in DeFi to more user-focused and data-driven products. And that is a trend we believe is going to be here for the long run. And then we're going to share a couple of practice areas by our team. Now, the evolution from function focus to user focus, what I mean, right? So if we take a step back, right? For example, 5 or even 10 years ago, when you look at a lot of the trading related consumer services, the first thing is the money exchange that we all used, right? For example, I'm in Singapore, and there's a big money exchanger market across the street from where I live. And it's a physical brick and mortar store with, I would say, a fixed counter where the users would come to visit, right? So they don't offer the service to your doorstep, to your mobile phone, but you need to go to them, right? So it's a function, and it's mostly built around that function. From there, many people start to use, for example, the FX trading platforms and the earliest versions of centralized exchanges, where of course there'll be very fancy charting options. It's more like a corporate software than a like a consumer app. And from there we see the birth of DeFi. For example, this one I took a screenshot from Uniswap. It's such a simple and beautiful interface that you can easily swap one token for another without going to too much complex analysis or I would say relatively speaking advanced features. And from there, now things even go mobile and through either apps or PWAs. For example, FriendTech. Yeah, so it's an immersive experience, and on every screen there is probably just one button that you can click on and then complete the transactions, right? So this evolution has been very, I would say, straightforward and obvious to evolve from a more complex and function-focused interface to a more user-friendly focused one. Now, does that simple UI means the user, now don't need to know that much, so that well, actually we need to prepare less data for them? Actually, just the opposite. The simpler the interaction is in terms of the UI and the whole experience, it actually means more data are going to be required. But it's just these data will mostly be processed on the side of the DApp, on the side of the app, before you show a recommendation or something with a smooth experience to the users. So that will mean two types of data, right? So you need to understand your user behavior, right? In order to offer something so simple to them, you need to understand their behavior. It's not like the old days, for example, on the bottom left of this chart, again, if you open a money exchange, you don't need to care. And then if you have a like an enterprise software type of interface, you don't need to care. You just put everything there. As a builder, as a developer, you just put every sort of info, every piece of information, every function there, and then let the user explore. Those are the old days, right? Now you'd be very careful what you put there, and based on the data analysis of what the users like, how much conversion is, then you decide where to put certain buttons or elements without confusing the users. And that's why now it means more user behavior data are needed. And then the second part is actually now, instead of giving all the like detailed pricing and decision-making analysis to the users themselves, now more pricing and financial data are required again to be to be provided at the core, or more at the back end of the service. Because now, for example, I take the example of Uniswap, right? Uniswap has a lot of different pairs of tokens, and then the pricing data is used by hundreds of other protocols. So it's a big sum of the pricing and financial data, but again, that is not shown like all listed, all piled up in the front end, but rather in the back end, so that again it gives the user a much simpler experience. That's why for this evolution to happen, is actually more data rather than less data that is required. Now, also, data is the best thing when it comes to analyze behaviors of users, right? So before we have data to prove things for us, there are many myths and ideas around the user behavior. For example, I take one example. I like this example because we truly care the user's experience, and we think they are the long-term value contributor in our ecosystem. For example, as a builder, I heard all of these things, sometimes from my friends, sometimes from the team, or from other builders. For example, the first one, the users will know us because we're good at what we do. That's idea from my mind, but is that true? So that's something that would need to be verified by data, right? And then the second idea is that I think my product design is the best, so user is gonna love it. Similar to the first thing, it's what usually the product guy is gonna say. The third one is that when we design like a UI UX, we think, hey, I'm a user. I can go through a three-step process, so the users can do the same thing. Or even the next one, this is a common one, right? So I can keep a 24 keyword seed phrase safe, so a user can do the same thing. Look, I cannot say because I can do it. So, but when it really goes to the market, this is where some user behavior data is going to say whether this is right or no. And of course, when it comes to user retention, some people think, hey, because the product is nice, so people who use it will always come back. Yeah, so anyone we convert it will later, come back to us, become a loyal one. And then the marketing team will usually say, hey, this is the best campaign idea I've ever had. It attracts so many users to our product. Or sometimes there's this myth that the underlying network token is going to the moon. So will the volume of a perp DEX that built on this network. And of course, the last but not least, there's always this network effect that we need, for example, between the liquidity provider and of course the other side, the traders and the arbitrageurs. And we usually we believe if there's one side, for example, if there's the liquidity depth, then we would you know naturally have the most volume. And there's only one thing that can prove these myths or ideas. Otherwise, they'll just end up in talking. Um, Unfortunately, that's the fact in this industry. So far, I have seen so many people just talk. They just talk their ideas um, without showing actually they work or not. But why? Because they don't have a data-driven approach to look at the user behaviors. Now, this is what's reality, right? So once you have user behavior data, for example, the first one, when we think the product is good and the user should come, that's what we think. And you only look at how many users are landing, on your D app, then you realize what the users are thinking. And most of the time, they're very different. And the second one was the fallacy that many teams would try to avoid, where building the best product for ourselves doesn't mean this is the best product for most of the users, because by analyzing, for example, the interaction data, many people would find that I would say a complex UI will mean amazing choice for themselves, rather than actually the best thing for the users. And this is not exaggerating, but if you have a 3-step process, around 90% of your users going to drop out. And if you ask the user to remember a 24 keyword seed phrase and keep it safe, maybe majority, 99% will drop out. That's why, in many cases, to have these different layers of user behavioral data will be critical when it comes to verifying whether some of the product design makes sense. Because of course, we won't want everything to be safe. We definitely don't want to drop most of the users. And of course, when we carry out analysis of whether these core users also use other products, it may obviously come out these users are not loyal at all. They are also trying other products. It's not just they tried our product once and will always come back and become like an exclusive user. Most users use other products, right? That's what data has shown. And this is a funny one. If you actually pull the campaign data and analyze carefully on this, in many cases, more than 50% of the campaign results will be below expectation. And there's interesting saying that in marketing, half of the money is wasted. It's just you don't know which half. But with data now, we can know which half. And of course, there are other things that can be easily proven incorrect once we have the real data rather than just running everything without looking at it. So I use user behavior as a example of how important data can be when it comes to design a product, when it comes to design a product that would eventually have users to use them, right? Rather than a toy for the 1% of the people, or like a rocket science. Yeah. So then I also will touch on some practice by the SynFutures team to basically increase the variety of asset offerings on the platform through this like a Amazon type of derivative experience. So sorry, there are many elements on this page, but the simple idea is on SynFutures, we're not like other perp dexes where there's a small amount of markets dominated by a small amount of players. We believe the power of the mass market, and that's why we partner with Pyth. We partner with some other good networks to enable a 30-second asset listing process. So basically, you find your spot market pairs, or you find your like the oracles from Pyth, and then that can be used to create an initiate a new pair of assets, so long as, of course, there's sufficient liquidity or solid, solid price feed on this network. Then a new futures or new per pair can be created. That increase the variety of possibilities there for the tradable asset. For example, when we were on, our V2 were on Polygon, and then there were some new projects on the network that even we had little idea about, but the community came and listed these assets because these were hot assets on that network. And for a period of time, that was like majority of the trading volume for a couple of weeks on the platform, and that's like trading data results, then leading us to know about more the user preference, and therefore we actually expanded that program, and now we call it DAO Futures or DAO Perp. So on the V3 of our product, this will be further expanded to more networks with a collaboration with Pyth and Uniswap, SushiSwap, and a couple of others. So we always strive to try our best to offer the biggest variety of underlying asset pairs, and a lot of this are long-tail assets that no other market makers can handle by themselves. But we believe that is the power of DeFi. So flip the page and also very briefly touch on the latest design of SynFutures version 3, where we have this Oyster AMM as a combination of on-chain range liquidity as well as on-chain order book. So the idea is simple. When we started almost 3 years ago, we started from the AMM school, and as I mentioned earlier, that worked very well for long-tail assets, for a big variety of assets. But that also has its drawbacks, to be honest, for major token pairs such as wrapped Bitcoin or Ethereum, etc. The liquidity depth around the fair price is not as good as for example, a typical order book, because for AMM liquidity, especially in the more XY equals to K type of evenly spreaded AMM liquidity, each point is relatively thin. So that then we realize, okay, in the next version, for example, this V3, we're gonna allow concentrated liquidity AMM, i.e. the range AMM, like Uniswap version 3, but it's perps. And at the same time, we're gonna allow some of the liquidity points to be like irreversible, so that when you cross from one side to the other side, after that liquidity points get canceled. So effectively, that additional liquidity is added to the underlying concentrated liquidity AMM, and can be used to fill the taker trade together. And so that is a simple idea that we want to put like range liquidity together with the capital efficiency in one model. So today this is on testnet. We're rolling this out in the next couple of months to the mainnet, and there will be more alpha coming, because we haven't launched tokens yet. Sorry, I couldn't comment too much on that, but hopefully that we give you a good idea of not only just how the product work, but also some extra alpha in this. Yeah. With that, thank you very much, everyone, and thanks for the Pyth team to pull this off. This is amazing. Thank you, and have a very nice day, everyone.